Hey everybody, today is January 26th, and today we're going to talk about the stock market. The Fed meeting just finished, and I'm going to talk about what they said and the implications for the market going forward. Is it going to help the bulls reclaim the 200-day and perhaps reclaim all-time highs, or is this going to be bad news that's going to see the stock market fall further downward? Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so the Fed meeting just concluded, and of course we're seeing really choppy price action, right? Initially, when the news first came out, when the meeting notes came out, there was a huge pump, right? The market was up hundreds of points on the Dow, right? And now we basically lost all those gains, and it's just been very volatile, very choppy, right? The VIX spiked up very high to 33 at one point, still above 30, which is still very high. In general, but the stock market is trying to find support right now, right, to get out of this downtrend that it was in for the past hour that Jerome Powell was talking and answering questions, right? So why was the market so choppy today? Well, today the Federal Reserve actually didn't really make any changes for now, at least, right? There's going to be another meeting in March, and they said that by then they not only expect to finish their tapering, their asset buying program of treasury bonds and mortgage-backed securities and etc., but they're going to consider raising interest rates in March, and that's where a lot of people are expecting the first interest rate of this year. So for now, they're still going to continue purchasing assets every month until March, and of course, there's no interest rate hikes for now. So there's going to be a lot more speculation in the next 2 months. But yes, for now, they haven't really done anything. So I think the market was just reacting to what Jerome Powell was saying as he was answering the questions. And he was basically just giving your usual cookie cutter answers, how he's going to do whatever he can to support the economy and to fight inflation, right, and keep it down to the 2% target. And yeah, he does plan on raising interest rates, and he talked about how the economy is doing well and is strong, and as long as the economy continues to recover from the pandemic, they're going to have more leeway to increase rates and begin tapering their bond buying program. And so just the usual stuff, but I think that what really scared the market was like whether people were trying to assess what the magnitude of the rate hikes and tapering program the bond buying program was going to be, and so you saw a lot of choppy price action, and even right now, there's about 12 minutes until the market closes, and we're still seeing the price action be choppy. So I think it's gonna take a couple of days, probably till the end of this month, for the market to digest the news, right? And we'll see which direction it's going to pick. Whether it's going to go up or it's going to go down. But right now, just technically speaking, we're very oversold, right? We can see that the MACD is just plunging, and the RSI has been below 30 for many days right now. And that's usually when that's the case, right? Historically, that has been a good time to buy, right? Now, that doesn't mean you have to buy right now, because the RSI can get oversold and still and the price action can still go down lower, right? So it is possible that we can see this kind of roll over and go down even lower, with the RSI even going down, or even rolling up if the magnitude of the dump is a lot less severe than initially, right? And that can cause a bullish divergence, which could be a great that's a bullish indicator, right? But we're still we have to still see how the price action develops, and for now, as long as the price is trapped below the 200-day, which is this blue line, right? And the 200-day moving average is a very important long-term moving average, right? Because you can see when we have pullbacks, we usually hold the 200-day, and we don't want to stay below the 200-day, because the longer we stay below the 200-day, we're going to start seeing these short-term and mid-term moving averages, 50-day and 100-day, start to cross over. And when these moving averages cross over into bearish posture, it's going to be bad for the market, right? So we want to see the 200-day be reclaimed as quickly as possible. We tried to do that earlier today, but we see we got a rejection this week, right? So we do want to see if the bulls want to take control of the market, right? We want to see the bulls push the price up higher, at least above the 200-day. Try to cultivate support and push the price up towards all-time high, right? Because right now, the longer we stay below the 200-day, the more the 200-day is going to act as resistance as the bulls try to push the price up, right? And we definitely don't want to take out this wick. If we retrace this wick and take it out, we'll probably have to retest this Fibonacci support level, which took some time to build back last summer. So if we do break this part, it's probably going to come down to our next support level around 400, right? So we want the bulls in the short term to quickly retake the 200-day and push the price up higher. And of course, if you're a bear, you want to see the price to retrace his wick all the way down and try to break through the support level around 410 to 420, right? This Fibonacci support level, right? So yes, I think that the news today from the Fed is going to take some time to digest. It's going to take probably at least the next couple days, right? The next week or two. The fear ingredient index in the stock market is down at fear. And yeah, things are looking very oversold. So I do think that at least in the short term, we should be able to see at least a bounce up to perhaps 450, right? But then we're gonna have to see if the bulls have what it takes to keep pushing the price up higher, because this news wasn't necessarily dovish. It was also at the same time not necessarily hawkish. It wasn't necessarily bad. It's not like the Jerome Powell said he's going to right now, increase interest rates or begin tapering, right? So it's basically what the market expected, right? And maybe a little more leeway as well, because he said that, oh, we're not gonna do anything until March, and that's when we'll decide. So there's going to be 2 months of data that's going to come out. Of course, the big one is inflation data, right? We do want to see inflation go down a bit, because if it keeps going up, if the inflation keeps going up, this is going to put a lot more pressure on Jerome Powell and the Federal Reserve to hike interest rates to try to control inflation, right? And yeah, so the market, so yeah, there's not really much to say except a lot of volatility, price action, choppy price action. Pretty neutral in my opinion. Not too bearish, not too bullish, not too dovish, not too hawkish, just what the market expected. And this was really just choppy price action reacting to when Jerome Powell was answering the questions. People trying to read between the lines and see what he's actually saying, right? But we need to just look at the chart and see what the chart is telling us, because the chart never lies, right? The chart will tell us what's going on, what the market really thinks. So just to summarize, we need to see, if you're a bull, you want to see the price go back above the 200-day and at least cultivate some support, right? Cultivate some support above the 200-day and then push up higher to all-time highs. If you're a bear, you want to see us retrace this wick, go down to the Fibonacci support level around 410 and just push below, right? But we're going to have to see how the price action develops going forward as the market begins to digest what the Federal Reserve just said. And we'll definitely update you possibly next week and see how the price action develops going forward. If you found this video helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.